In today's video, I'm going to share 6 stocks who just grew their dividend payment at a high rate. These are all well-known, rock-solid businesses which are going nowhere and may just deserve a place in your investment portfolio. My name is Zach, this is Dividend Data. You should leave a like and subscribe to the channel if you enjoyed the video. Throughout, I'll be using my stock research tool, dividenddata.com. This provides breaking dividend news and tools for deep financial analysis. Stock number 1 is the Hershey Company, ticker symbol HSY. This iconic chocolate and snack company is home to top brands like Hershey's, Reese's, Kit Kat, Jolly Ranchers, Icebreakers, and much more. Over the past decade, the stock has seen significant returns with fast-growing earnings. This is one of the best consumer defensive companies that I've analyzed. The growth far outpaces the likes of Coca-Cola and PepsiCo. However, earnings slowed in the back half of 2023, and it looks like the company could slightly decline in 2024. It's for this reason the stock price is down 31% from its high. In spite of recent performance, Hershey just increased its quarterly dividend payment by 15% for the second time in 1 year. That's two 15% increases in 1 year, making the 1-year compound annual growth rate 32.24%. This is far ahead of Hershey's typical growth. For context, the 10-year dividend CAGR is 10.94%. This payment is sustainable too. The 2023 dividend payout ratio based on free cash flow is 57.28%, and the net income-based payout ratio is 47.75%. These dividend increases boost the annual dividend payment to $5.48. At the current stock price, that is a 2.91% dividend yield. Based on that, it's the highest current dividend yield since 2018. The main question here is whether Hershey's growth can continue. I'm expecting the rate of growth to slow from here. Frankly, I'm surprised by the 2 increases in 1 year. It seems like Hershey's management is more confident than the market going into 2024, so this could be a buying opportunity long-term at a somewhat reasonable valuation. In my analysis, Hershey is a great business with an economic moat that will keep it strong for decades to come. That said, there is a new competitor in the chocolate arena with Mr. Beast's company Feastables. I would not want to compete with or bet against Mr. Beast. I don't view this as an existential threat to Hershey though. It could perhaps be a future acquisition target. Stock number 2 is the Walt Disney Company, ticker symbol DIS. This business suspended the dividend in 2020 as its cash cow parks business was shut down. At the same time, Disney was going through a massive transition, pivoting their legacy media business model to direct-to-consumer streaming. In that time, they made many mistakes. Specifically, they increased costs dramatically. However, the Disney business is finally turning around and starting to generate large cash flows again. In 2023, they earned just under $5 billion in free cash flow. They have said in their guidance they expect around $8 billion in free cash flow for 2024. On top of this, streaming is expected to reach profitability in fiscal 2024. As a sign of improved economics, Disney brought the semi-annual dividend payment back. On top of this, they announced that they are increasing the next payment by 50%. That dividend is payable in July 2024. This makes the current annual dividend 90 cents per share, trading at a 0.84% dividend yield. I'd expect dividend growth to continue, eventually at all-time highs in a few years. On top of this, Disney is also targeting $3 billion in share buybacks for fiscal 2024. Things are finally turning around for Disney shareholders. Stock number 3 is the Coca-Cola Company, ticker symbol KO. This is the dominant beverage company known for being one of Warren Buffett's top investments. KO stock is a dividend king with over 50 years of consecutive annual dividend increases. While growth is slower than in decades past, it has shown no signs of stopping. Coca-Cola just raised the quarterly dividend payment by 5.43%. That is the highest increase in a while, exceeding the 5-year dividend CAGR of 3.93%. It is sustainable too. The dividend payout ratio based on free cash flow is 81% and 74% based on net income. It may seem high, but for a mature company like Coke, they prefer to pay out a large portion of cash flows to shareholders. This dividend raise makes the forward-looking annual dividend $1.94. At current stock prices, the dividend yield is 3.2%. Stock number 4 is PepsiCo, ticker symbol PEP. This is the global snack and beverage company which owns popular brands like Pepsi, Gatorade, Lay's, Fritos, and Doritos. Similar to Coke, PepsiCo is a dividend king with over 50 years of consecutive dividend increases. They just announced a new 7% raise coming in June 2024. This is not yet fully reflected in my data on dividenddata.com, but it only adds to their history of growth. The 10-year dividend CAGR is 8.39%. The payout ratio is high but sustainable at 84% based on free cash flow and 73% based on net income. I do worry if the pace of these increases can sustain. The new forward-looking annual dividend is $5.42. That gives it a dividend yield of 3.22%. Stock number 5 is Ferrari, ticker symbol RACE. Yes, Ferrari. The company went public in 2015, and in my brief analysis, it is one of the few car companies actually worth buying. They are one of the top luxury brands, allowing them to charge industry-leading margins. It's rare in the automotive industry to have great margins. As part of this luxury model, they purposefully keep their supply and customer base constrained. They are actually under-earning on purpose. It's a great business. The company pays an annual dividend, which is inconsistent with increases, but continues to grow long-term. They just announced a 35% increase payable on May 3rd. This makes the forward-looking annual dividend $2.65 per share USD. At the current stock price, it's a 0.63% dividend yield. The company will likely have high growth well into the future. However, it trades at a premium valuation and is currently priced at all-time highs. There may be better buying opportunities ahead. Stock number 6 is Walmart, ticker symbol WMT. The large retailer just raised its dividend by 9.2%. This is after a decade of dividend growth around 2%. The fiscal year 2025 annual dividend is 83 cents per share. It is important to note that they just had a 3-to-1 stock split, and the data on dividenddata.com has not yet adjusted to reflect this change. So those are the top 6 dividend raises from the past month. Please leave a like, share, and subscribe to the channel for more videos and stock analysis. Sign up for dividenddata.com if you want to use the research tool I've been showing throughout. Here you have all the tools to help you find better investments. The best part is, with one slightly better stock, the service pays for itself. Thanks for watching.